Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is September 5th, 2022. And Bitcoin, as well as the rest of the cryptocurrency markets, are literally at a standstill, okay? We've been in this nasty consolidation. I say nasty because it's boring, okay? And one of the things that people dislike the most in sort of following price action is waiting and being bored, okay? And just being lulled to sleep, okay? Ever since we ended this ending diagonal right here, we've been in consolidation up and down in this small range for about 8 days, okay? And this is a range that has taken Bitcoin between about 20,575 at the top to 19,556 at the bottom, okay? And that may vary by a few dollars depending on your chart. But yeah, this is what we have, and this is the situation, okay? It is nerve-wracking. However, in this stream, I'm here to tell you that this is not the most important chart, okay? This is not the most important chart. Yesterday, I was saying how we may very well pump at 6 p.m. Eastern Standard Time if indeed the US dollar index was trading. And the US dollar index did in fact trade yesterday, okay? And yesterday was September 4th on Sunday. And why was that day important? That day was important because you have to really think about what moves Bitcoin's market and crypto's market, okay? It's not some person buying $50 or $100 or $100,000 in Bitcoin. That's not what moves the market. Think about it. You have an almost half a $1 trillion market, right? Bitcoin right now, the dominance is around 40%, okay? It's a little shy of 40%. So let's say $400 billion market cap. For it to move, you need big bucks. And it's not every day that somebody's buying a few $1 billion worth of Bitcoin in transaction, right? Like, that doesn't happen. Why is our market moving? It's because the dollar's moving. This is why, in order to understand Bitcoin's price action and how Bitcoin moves and when Bitcoin's going to move, you have to understand the US dollar index, the DXY, okay? But these charts are one and the same. So if you were to say, I'm not that interested in DXY, I just want to look at Bitcoin, that's also fine. But the tricky part about that is, then you have to be able to read this corrective price action. And you have to be able to read it well enough to say, oh yeah, that is the end of such consolidation. You know what's easier? You know what's a lot easier? Reading the end of a large impulsive move. Because right now, as Bitcoin is at the bottom of its market, it's in consolidation reversal, right? It's putting in these complex corrections left and right. The US dollar index, however, which, if you don't know, is almost 100% inversely correlated to Bitcoin, all right? Again, they're mirror images of one another. It's one yin to the yang. So you have Bitcoin on the top here, you have the US dollar index on the bottom, and you can see mirror images of one another. So if Bitcoin's up, the DXY is down, DXY is down, or up, Bitcoin's down, all right? So just understanding that it's almost an exact inverse correlation, then jumping into the DXY, which we want to focus in on, right? That is the single most important chart, not just in crypto, but in equities, right? Same with, I'm not saying that nothing else moves the market, but by and large, this is what moves the market, okay? It's not some random like, ooh, this is a good coin and they have good news and everybody's gonna buy it. Yeah, that happens from time to time. But by and large, especially for Bitcoin, for projects with large market caps, what moves the market is the dollar index. Why is that, you say? It's very simple. If 60% of the world's economies use the dollar as a reserve currency, right? And the dollar is pretty much the thing to use to buy these assets, whether cryptocurrencies or equities, then you want to understand that as the dollar moves, so do these things move, okay? And it's not, again, because somebody's buying or selling precipitously. It's because the dollar is the underlying asset, so use whatever you want. Bitcoin, okay, dollar. The dollar goes up, given that it's in the denominator, then Bitcoin goes down because this ratio, whatever it is, or, whatever the ratio is, okay, whatever the ratio is, for it to stay stable, and we're assuming nothing's changing, right? You're not injecting a ton more Bitcoin into the equation. You're not injecting a ton more dollars into the equation, right? Precipitously. For that relationship to stay, the biggest mover will affect the it will affect the ratio, okay? So if you see what I mean, the more the dollar goes up, or the dollar's perceived to go up in value, yeah, right? The DXY, which is the relative strength of the dollar as against a whole range of currencies, right? World currencies like the euro, the yen, all that stuff. If they decrease in value and in strength, the dollar increases. Or if the dollar increases in value and strength, then it increases, right? At the same time, Bitcoin will decrease and vice versa because it's a ratio. That's inverse correlation right there, okay? Same with equities. You can say, right? You can put here, you can replace Bitcoin by S&P 500, right? The dollar. If the dollar increases, then the S&P is going down. The dollar decreases, the S&P is going up. I think that's simple enough. And this really explains how you can move the market with so much. Have you ever wondered why sometimes you have news stories, right? Like right here, you're in your trading view. By the way, if you want to see relevant news stories in trading view, you hit here, and then you can see a bunch of different stories, right? But sometimes there are stories like, this crypto whale bought 400 million in Bitcoin or 500 million in Bitcoin, and literally the price doesn't move. Obviously, it doesn't move. Do the math. You're talking about a 400, 500 billion dollar currency, right? Market cap. So what the hell is 400 million gonna do? Maybe it moves it 1%, maybe at most. Okay? Do you understand what I'm saying? Like, for these big moves to happen in crypto and in equities, you need big money. And the dollar is where the big money is. Okay? The dollar moving up and down. This is why this is the single most important chart in crypto and in equities. Guys, if you're getting value, please like, share, and subscribe. I don't hear anybody talking about this. Obviously, people talk about the inverse correlation with Bitcoin and the DXY, as well as equities in the DXY all the time, right? You hear people talk about that all the time. But what you don't hear about is why they're inversely correlated. One, how well that correlation fits. And also, why you can expect moves in the market once you find moves in the DXY. Not the other way around. It's not Bitcoin's moving, so the dollar's moving. At least not at this point, yeah? At this point, it's the DXY is moving. Okay, what direction is it moving? That's where Bitcoin and equities are going to move, and that's what we've seen, okay? So, having said all that, we want to pay attention to this chart, right? Just like I had in the thumbnail, I'm going to show you this larger chart, of the DXY, the US dollar index. And this is on the monthly chart, okay? And what you can see here is a very simple 5-wave move to the upside, okay? And that started over here in March of 2011 and ended over here in October of 2016, okay? That was the end of wave 5. Now, as you know, after 5 waves, you get 3 waves, okay? And these flat corrections usually take around the same amount of time as the impulse took. So this is why I have this here. The 5 waves that I have, this impulse took about 2,000 days. So right now, this flat correction has taken around 2,000 days, okay? There's a little time left, right? So you can expect this move down to finish this flat correction, because right now we just have 2 waves. We have an A wave, initial break of structure targeting wave 4 of the previous trend. We have a composed B wave, the 3-wave move. That's a counter move to the A wave. And then we have 5 waves down. Do you see what I mean? So we can expect, first of all, we know that we have 5 waves down because every single last corrective wave, be it complex, be it simple, doesn't matter, always ends in 5 waves, okay? And so if this went up 5 waves, you know you get 3 waves down. This is what we're expecting here. And that should be quick because 1, it's impulsive, 2, because it should end up taking around the same time, right? It doesn't have to be exact, but around the same time as it took to go up. And that is from the guideline of equality, or I like to call it the guideline of what the hell do I call it? I don't want to call it equality because it doesn't have to be equal. It doesn't have to be 2,040 days and 2,040 days. It's a guideline of proportionality, if you will, right? Where waves of the same degree are equal in time and in price. This is your equality or proportionality in time. Okay, you have your proportionality in price where you go 5 waves up and then you come down 3 waves. So let me not confuse you. These are the 3 waves I was referring to. You don't want to come down. You wouldn't come down more than the 618. So if you take your Fibonacci retracement tool, you wouldn't come past this right here, 83. Do you see? 83.34. Maybe you wick down, but you don't come much past that. Okay, so that's your equality or your proportionality in price, and your proportionality in time is just like I said. You expect a big drop here, right? Coming down in very short order to complete this 3-wave move down. And then you consolidate a bit, and then you continue, and the dollar goes back up, okay? So you can look at an indicator like your stochastic RSI, which I always favor on this channel. One of the best momentum indicators. It's nice, it's simple, it's straightforward on high time frames, super reliable. Here, let's just test it out really quickly. Over here, it's oversold, or overbought rather, right? It's overheated, overbought, overbought, overbought. That's the top of the market, right? That's signaling the tops of the market. Once again, here, here, top of the market, here, here, top of the market. Like using the stochastic RSI on a high time frame is one of the easiest ways to read a market. Okay, if you know nothing about price action, you can do quite well, right? And now you get into, so basically you have this strong, you have this strong bearish divergence here, right? Price going up, momentum's going down. That tells you that you're pretty much finished with this 5-wave impulse and you're starting to correct, okay? Let's clean this up a bit. Once you get over here and you see 3 waves, now you want to, I have this red line, and for those of you who aren't subscribed, you'll know, or for those of you who are subscribed, you'll know that I typically red line my 5 ratio, okay? And essentially all that means in plain English is that I've taken the Fibonacci retracement level of this initial break of structure, this A wave, from the top to the bottom, okay? And that's given me where the 1/618 or phi ratio of this A wave is. And the reason I do that is because, according to Elliott wave theory, the B wave does not retrace much further than the phi ratio. Okay? The B wave can be an expanded B wave, an expanded flat, where that basically means, you see here, the B wave has broken the plane here. Let's make that a solid line, not to confuse anybody. So the B wave right here has broken the plane of the A wave. Okay, so the A wave is basically right here, starting right here, and the B wave goes up. So this is what you call a bull trap. People who aren't price action or chart fluent, right? They don't know how to read chart. They're not chart literate. They think that this price action here is a new impulse. But if you can read your divergences, you can read your momentum indicator, you can read, you can count Elliott waves, basic Elliott waves. You could see that, oh, this is still in correction. This is a B wave that has gone and broken the plane of the A wave, which happens all the time. Expanded flat is what you see actually more often than not. And so the maximum retracement should be the 1/618, which is right now around 111. And what happened earlier today, and now we're going to zoom in. So let's zoom in on the daily first, okay? And I just want to point out, well, I can point this out on the daily, but you can also see this on the monthly and the weekly. You're completely topped out right here, okay? So let's go back to the monthly, because I do want to make this point. Very important point. That very important point. I started off by telling you that this momentum indicator, this stochastic RSI, especially on a high time frame, was very reliable in indicating overbought and oversold conditions. It could have shown you where the market was oversold, where you were at support, where you should buy, and you can expect the market to go up. This works exceptionally well when you're in impulse. It works less well. It's less reliable when you're in correction, okay? Most indicators are like this. Most indicators are poor in correction and most indicators are poor in correction and they're rather better in impulse, okay? So just keep that in mind if you're using indicators to read the market, like market cipher or anything like that, or even your stochastic RSI. If you're in correction, it's a little trickier. You kind of have to know what you're looking at. In any case, so the monthly stochastic RSI is showing that we're pretty much done, okay? And it's showing some strong bearish divergence, as you can see here. On the monthly time frame, you made a higher high here. You're equal. That's strong bearish divergence. That means you're coming down, and obviously you're coming down because you're topped out here, all right? So that's what you're seeing on the stochastic RSI on the monthly. Now zoom into the daily once more. You can see on the daily that you've created so this I counted as the end of this parabolic impulse. Now let's turn off the stochastic RSI indicator because it's a little messy in the smaller time frames on this asset, on this DXY, and this index. And you can see parabolic growth here. But what's important is this initial breakup structure, right? And you can count 1, 2, 3, 4, 5. So you have two extensions here. So basically the dollar's been parabolic, and that's exactly what it looks like, right? And when you count the Elliott waves, you can see exactly where it's been extended. So waves 1, wave 2, wave 3, waves 4, normal. You had an extended wave 5. Let's zoom into that. Okay. Right here you can see you've gotten, and I'm just going to count this out by hand, you've gotten wave 1, wave 2, wave 3, wave 4, and then you've gotten an extended wave 5. So you get extensions within extensions. So in this regular in this wave 5 extension, you've gotten again an extended wave 5, right? It's not completely extended, but it's relatively extended. Okay, so you got two extensions. The dollar's been completely parabolic, and you can just see that on a higher time frame because it's almost reached its maximum limit for the B wave, okay, the phi ratio. And now you zoom in even a little bit more, you can see, so let's zoom in on the 4-hourly time frame. Guys, if you're getting value, please like, share, and subscribe. Zoom in on the 4-hourly time frame, you can see this is an initial break of structure, okay, that you've gotten here. So right here you get three waves that breaks this big sort of rally, right? And you target once again wave 4 of the previous impulse, right? And now you have a B wave that's coming here and ending in an ending diagonal. And you can see this. I'm just going to zoom in, or actually I'm gonna let's zoom in and then let me count it by hand again. Actually, let's do properly. So here is, it's essentially a rising wedge, okay? And if you do pattern trading, you understand that rising wedges break down. Do you see this? So you see, one, two, three, 4, 5. Okay, so you have this ending diagonal in an ending, like it's just ending diagonals left and right, extensions left and right. Like it's been a nightmare to short. This is basically showing you why equities and crypto have been so beat down, because this dollar or underlying asset that, you know, crypto and equities are purchased with have been going up. So as a result, all things being equal, crypto and equities have gone down. Again, this is your A wave, this is your B wave. Anticipate a small pivot and a reversal. Okay, so even on the smaller time frames, you can see that you're overheated. Okay, and we saw that on the daily time frame, right? Turn on your stochastic RSI. You see it on daily time frame. You're creating bearish divergence here. Obviously, we all know that these rising wedges break down. Okay, and obviously your stochastic RSI is telling you the same thing, right? Price going up, momentum is equal. That's bearish divergence. Expect to move down, not just because you're overbought. In overbought conditions, you're in overbought territory, but also because you have strong bearish divergence. On the monthly, on the daily, I don't know, on the weekly, do you have it? I wouldn't say it's confirmed on, it's not confirmed on the weekly because these K and D lines have not yet crossed, but you have confirmed strong bullish or strong bearish divergence on the monthly and on the daily. That is a really good sign for crypto and equities once that move plays out. Now, I said that yesterday at 6 p.m. at the open of the DXY, right? Because DXY opens trading on Sunday at 6 p.m. Eastern Standard Time, that we would get a big move in crypto. Okay, that was assuming, so let's zoom in now. Now we're on the 15-minute time frame. That was assuming that this played out. Okay, so here's the gap I'm referring to. So this is where we stopped trading on Friday. Okay, this is where we resumed trading yesterday at 6 p.m. Okay, I was actually expecting it to go down, to gap down, but again, you have these overextended impulses, right? This is just, the dollar is as bullish as it's been in decades, right? So even when it seems to be overheated, overextended, it's really pushing the limits of, you know, resistance. So you have this gap up, it's come up, finally gets rejected at this resistance right here, this dotted line, which I'm going to show you in a second. Let's zoom back out on the weekly. This is how you have, or actually let's zoom back out on the monthly. This is a very important resistance. Okay, as you can see here, right? If you channel these 5 Elliott waves, you can see that this dotted line up here is important resistance, and that's exactly what we hit. Okay, so let's go back on the small time frames, and you can see that's what we hit. And once we hit it, we came back down, and it served as a, okay, that's enough for me. It's basically a retrace where you make a lower low. Okay, so here was a low, you came to make a lower low. So that is one strong sign for reversal finally in this 20-year high that the dollar is showing. Again, why are we looking at the dollar? This is a crypto channel, daily Bitcoin update. Again, if you're joining late, this is the most important chart in crypto and all of equities. This is what's going to move the market. We've been in consolidation for Bitcoin for the past 90 days, 95 days, but we've been in this particular channel between 19.5 and 20,500, that is, for about 8 days, okay? And if this is indeed the bottom, the big move up is going to come when this finally breaks down, okay? So that's why we're looking at the DXY. Let's take a small break, see if there are any questions, any comments. Guys, if you're new to the channel, definitely shout yourself out, let me know where you're listening or watching from. All right, so going back into this small time frame, we can see that we rejected with some sort of choppy price action downwards, some consolidation, and a quick impulse down. Okay, this to me looks like a B C. So this looks like a zigzag. Okay, this looks like a zigzag. So what I'm expecting is a corresponding B wave like this to come back and test this one more time before finally consolidating one last time and then dumping. Okay, I'm going to show you this very same pattern in open interests in Bitcoin shorts on Phemex. I'm going to show you the same pattern. Okay, so let's zoom out for a second on the hourly just to get a good idea as to what this looks like. Okay, and this is a quintessential kind of garden variety pattern that you can see. So you have, again, 5 waves up. Okay, let's see. Right, there we go. That's more like it. So you have 5 waves up in this leading diagonal. You finally broke the trend with this A wave. So this is 3 waves down. Okay. Expect 3 waves up. Small pivot. Come down. Come down. Keep going down. Keep going down. Keep going down. Okay. So that's basically the price action I expect. Again, if this DXY is going to go back up and test 110 once more, then do expect, maybe even on a smaller time frame, Bitcoin and stocks to go down briefly, slightly. All right. But what's important here is not what's happening on the hourly time frame, but what's happening on the monthly and the weekly and the daily. We are at resistance, and resistance is showing, or the DXY, the US dollar index, is showing itself to finally respond to this resistance and reject from this resistance. All right, so it does look good in the near term, in the near future for stocks and crypto. It does look really good. We are at resistance, and we've been at resistance for quite some time, right? We've been at resistance ever since July 14th. Okay, we've been playing at resistance since then. Remember, because this is your initial A wave, this is your B wave. You're gonna put a smaller version of this, and this goes back to what I talk about on the channel all the time in consolidation reversal patterns needing 2 degrees of AB basing, right? If you really think about it, these are your 2 degrees of AB basing. Here's your all right, let's zoom out. Okay, so just so you can have some context, this is the top of your B wave. Okay, you counted 5 waves in this parabolic impulse. This is your initial break of structure. This is your A wave. Okay, so this is your big A, or first break of structure. Okay, that's your B wave. That would be you could call that big B. Okay, so that's your first degree of AB basing. Okay, now you have to do that a second time. Okay, and so you have this going on right now. So that's your first degree. If you zoom in, you can see the second degree happening on a smaller time frame, and that's what we were looking at right here. Okay, this is likely the case. Okay, not 100%, but it's likely what's happening right now. This is your second degree of AB basing, right? 3 degrees, or a small A, if you will, and then that's your small B, taking you back down up to 110, testing 110, and finally then you should get some semblance of strong rejection, up or down and out. Okay, so that's the US dollar index, that's the DXY. This is what we can expect and why we can expect it. This is a little easier than reading what's going on in Bitcoin right here, which is just a mess of price action and kind of low probability read here. Okay, what we know again is this ending diagonal descending broadening wedge ended on the 28th of August. You end up with a big A, or initial break of structure, targeting wave 4 of the previous trend, right? That's easy to read. And then what's a little more tricky is the subsequent B wave. It looks like you got a 333 complex correction here. Okay, this B wave that I have in white, the WXYXZ. Okay, so that's your 333, and that ends right here. Okay, on the 4th of September. So all of this right here, that's your big A, big B. That's your first degree of AB basing. Okay, but like, it's really, really challenging to read this 333 as it's forming, and not read, when does it end? Because you see certain impulses, you see, oh, maybe this is the impulse ending the B wave, ending the corrective price action, but it's hard to tell. Okay, but that's likely your first degree, and so that's in white, and in blue I have the second degree. Okay, and this should coincide with what we're seeing in the DXY, right? Is it going to be that the DXY has to completely dump before Bitcoin can go up? I don't know. Or is it just that the DXY has to show that it's at resistance, it has to struggle before Bitcoin goes up? I would think mathematically that the DXY would have to lose value, right? It can't be so high for Bitcoin to pump, right? Again, going back to that ratio. If Bitcoin and the DXY are inversely proportional, right? The higher the DXY, the lower Bitcoin. The lower the DXY, the higher Bitcoin. Okay, so we're expecting Bitcoin not to move until that DXY does reject in earnest. Okay, not just testing resistance and at resistance, but we're likely needing a rejection, and that's a lot easier to read than this, right? Because here it's a low probability. This may be the complex waves we're reading. We're not really sure on the smaller time frames. Just smaller time frames, not larger. I'm seeing this second degree as, right, what I just annotated, my A wave initial break of structure, and then here it's hard to read, but it's likely that we're still in this complex correction. So this is W is easy because it's the first one. Okay, even if it's a double 3, the first wave's always W, and X could be this could very well be X, and this could be, all of this right here could be Y, right? So what we may be doing now is putting in X2, right? Do you see what I mean? So it's tricky to read as it's happening, but one thing we know, it's still happening, because I don't think that it's finished yet, or else we would have gone, right? It goes, it kind of, you're reading the same thing. You're reading the DXY, you're reading Bitcoin. You should see them as the same thing. It's just opposites of one another, essentially. Okay? So I do believe that if you look, I think this is the end of Y. I think X2 is forming right now, and then we'll finally get a Z. Okay? And that would mark the end of the 2 degrees of AB basing, right? And so I think we still have a little bit of time left, right? How many hours, how many days, I don't know, okay? But, my assumption in saying that yesterday we were going to pump at 6 was assuming that that rejection, that let me just go to it so you guys know what I'm talking about. But the assumption was that this resistance right here would be met and rejected off of, okay? But to be honest, like, that may not have been the best assumption, given that well, no, that was a decent assumption, right? Because you obviously found some resistance here, right? So who's to say you wouldn't have done this, right? In any case, I was assuming, maybe wishfully thinking, that would have found some resistance here, and then over the course of 2 days just completely nuked. But that's coming. It's just annoying to have to wait for it. Yeah, that's pretty much it. Obviously Bitcoin hasn't moved, and it cannot move. As far as I understand it, Bitcoin cannot move until which point this rejection plays out and we get some impulsive price action to the downside. However, in that same time, right, there are some altcoins that have already started, okay? Not everything is going to wait for Bitcoin. Bitcoin's not going to lead, because we're in alt season. When things go up, when stocks go up, when equities go up, when cryptos go up, you see lower cap projects, lower cap assets go up first. So this is why we're seeing some altcoins rise, despite Bitcoin not yet having gotten to that point. Yeah? So let's look at some of the altcoins that have already made big moves in this market. So we can see here, let's see, looking at our crypto bubbles, let's just have a quick look around the market, right? And this is the daily, okay? But if we look at the week, we can really understand what's happened. Okay, so this is what's happened for the week, okay? And you can see there's not that much price action on the weekly time frame in the top 100. The biggest mover in the top 100 on the weekly is probably Chainlink and Cardano, okay? But 11% is not much, also Litecoins moved 9%, Atoms moved 13%, and Ethereum Classic 13%, okay? But the further down the line we go, okay, lower market cap, you can see bigger movers. Flux 26% already, okay? Celsius 14.8%. That's just this week. That just started, we just started, the week on Sunday, and it's Monday, so this is what you're seeing. If we looked and saw last week, we would have seen a lot bigger numbers. But just take into account that this weekly candle just opened pretty much. Okay, on the top 300, you can see you have some double-digit movers, but you do have some altcoins that have already started. Magic 16.2%, yeah. REQ 10%. Top 400. Okay, you can see this CON 46%. What else? Alpine 27% already. Porto 28%. Right? You have some movers, and again, a lot of these were moving last week as well. A lot of these assets were moving last week as well. All right. Top 500, you have Rook at 31%, SoFi 11%. Nothing crazy. SPA 52%. Okay. Well, it's like some of these assets are already moved, even though Bitcoin has yet to. Okay. And here, top 600 is this last one we're going to look at, but you can see double-digit movers. Key 13% up, Cyclub 86% up, right? So just to understand what's going on, like, it's not just that if Bitcoin's not moving, then nothing's moving. That's not true. Although the large majority of assets are not going to move until Bitcoin moves. So looking at the day, you can see Luna Classic is a big mover for the day. 44%, okay? That's a good sign for what's most likely going to move soon. SYN 26%. Okay, this is a daily looking at the daily candle. And we're going to have a look at Luna Classic in a second. Okay, not that I'm condoning or supporting. I wouldn't touch it with a 10-foot pole, just fundamentally, but we're just going to look at the chart, okay? Let's see, anything of note. Top 500, SPA 27%. Let's look at SPA, because I want something with more price action, like a bigger chart than Luna Classic. Luna Classic I don't like so much because, it just pretty much came into existence. So let's look at SPA. I have no idea what that is. Let's hope we can find a chart and see what the patterns are, if it's not foretelling some sort of move that we can expect in the rest of the market. Okay, so this is a low cap altcoin that we're going to be looking at here. Okay, so back to our charts, and let's just pull that up. Okay, so this is good. We have a chart against USDT, my stablecoin of choice. Okay, so let's zoom out first. As with any analysis, you want to start broad and then zoom in. So the monthly chart looks like there's only 1, 2, 3, 4, 5, 6 months of price action here, which is whatever, but okay. So the weekly, let's go on the daily. Let's turn on the log scale. Okay, and what you can see here is that on, let's see, okay, around the end of June, kind of like what Bitcoin did, it finished its downtrend. Okay, and here you can see once more that descending broadening wedge, that ending diagonal that you can see here. Okay, so what you're getting in this asset, let's go and zoom in, is this initial break of structure here, 3-wave move targeting wave 4 of the previous trend. So that's your big A. Seems like you got your big B to 3 waves down. Okay, I'm assuming that's all for your big B. Could be that it's a complex correction that lasts a little longer. So let's just look and see if we can't make sense. Yeah. Judging by the volume this is impulsive. Okay, it doesn't have to be, but judging by the volume, it's likely. Okay, you can get volumes in corrective price action. You can get volume bars, right? But just judging by this volume and judging by the length of this consolidation, you made a nice rounded bottom there. And from that initial break of structure, from the end of that descending rounding wedge, wave 5, ending diagonal, you put in about 44 days. Okay, that's not the longest time, but maybe all you needed. And here it looks like you put in let's see. This looks like a wave 1, wave 2 situation here. I don't know about that. Reason I say I don't know about that is because from the bottom of this impulse to the top and back down again, your retracement in 786. This is still corrective. This is still corrective. Because you can just tell by the base of it. You can tell by the base of it. So this is your small a, if you will. Right? So basically, that means that all of this right here is likely. So this was your initial break of structure. This was your big A. All of this was your big B. It's hard to read these things. It's hard to read them. It's possible, but it's again, it's hard to read them and say, oh, by virtue of having read that AV base or that consolidation reversal pattern, I know exactly when it's finished and when it's going to break. This is your quote unquote small a, or your second degree of AV basing right there. And I think what you're getting here is your small b. Okay? I think you got your small b down there. So it's like you got your small b zigzag, essentially a zigzag, because you have a 3-wave retracement that comes down to between the 0.5 and the 618. And so following that, you just started to get into impulsive price action. Yeah. So just looking at this SPA token, and again, I don't know anything about this. I'm not saying you should trade it. I'm just looking at it as an example for what some altcoins are doing that have started to run. I think your impulse is starting over here. Your impulse is starting over here. Okay, so it just started yesterday or 2 days ago. Okay, so if you know, all things considered, I think this is a good sign. If some altcoins have just started their impulse to the upside, then maybe, you know, others will follow shortly, and Bitcoin will also follow shortly. Okay. That's pretty much all I have. Is there anything anybody wants to look at? Any altcoins? Hey Milad, what's up? Milad says ENS still doing bad. Let's have a look at ENS. What do you mean still doing bad? Do you mean it's still sleepy like the rest of the market? Still consolidating? Let's have a look at ENS from Milad. Okay, so let's pull out the Binance chart. Okay, and once again, because I don't remember, let's just zoom out really quickly, get our bearings. I'm just going to erase any previous markings. I don't want to influence my read. Okay, let's go on the daily. Or, sorry, yeah, daily's fine. Actually, let's go on the weekly. Just want to see where we're at here. Looks like, okay, yeah, this is where we started. Yeah, just like most other altcoins. May 12th, orthodox low for ENS. Okay, so let's just look at that right there on the daily. Okay, so we can start looking at it here. This is your initial break of structure, targeting wave 4 of the previous trend. Call that big A. Likely to be big B. This is a lot easier to read. Okay, big B. Another 3-wave move to the upside, another 3-wave move to the downside. This looks great. Yeah, oh yeah, this is, I remember, this looks much like Ethereum. And then you have your impulse starting here. Right there. July 13th. July 13th is when you started. Just like Ethereum, actually. Yeah, I love erasing all of my prior work and not really remembering, and then just doing it and then finding out, okay, this is exactly what I've seen, right? So you kind of, you're not prejudiced by your previous analysis. So I'd say that you put in your 5 waves. Right, something like this. And then this is your A wave. This is your B wave. And then it's 1, 2, 3, 4, 5. Yeah, this is great. This looks great. I don't know what you mean, Milad, still doing bad. This is really nice. You have your A wave, your B wave. This looks like the end right there. Yeah. 5 waves up, 3 waves down, between the 382 and the 618 of the prior 5 wave move. Almost exactly between the 0.5 and the 618 here. And then you start to go up again in 5 waves. This is great. This is great. I mean, obviously I understand, people want, like, face melting price action, but this is doing what it's supposed to do. It went up it started its impulse, it put in 5 waves, put 3 waves to the downside. It respected the golden mean, right? Your 0.618, 0.5 to 618, right? This is where it bounced, and it started bouncing, putting in impulsive price action. And actually where you're at is this, you should start seeing more volume here, and you should actually see a push up to this resistance here. So you should go back to $18 very, very, very soon. Okay, that's what it's showing right here. On the 4-hourly time frame, if you remove this, let's see, you're getting good volume. Let's just zoom in to this new impulse. So this should be okay, if you just wanted to look at this on a larger kind of time frame, here's what you have. You have waves 1, right? Wave 2, wave 3s should come up somewhere here. Hold up, I'm gonna fix those in a second, but I just want to show really quickly, wave 1 and wave 2 should take comparable amount of time, not the same exact amount of time, but similar amounts of time. So 15 days, 4 hours for wave 1, and then wave 2's taken about twice as much. Again, comparability. It doesn't have to be exact, it's just comparable. So comparable, proportional. So it took twice as long to put in wave 2, and wave 2 was a complex correction or a flat correction, that's fine. That's okay. But again, you have a good relationship. You have twice as long to correct as it did to come into the impulse. That's okay. So wave 3 typically hits at between 1618 and the 2, provided it's not extended. So you have wave 3, all things equal, should come up to here. Okay, not to say it can't go any higher, but all things being equal, if it's not extended, it should come to at least that level. Let's zoom out for a second and see where we're at. And that would be, so I would say wave 3 is going to come right here. Okay, you see all that resistance right there? I think wave 3 comes up to that point, 38. Okay, so this is the move I'm seeing for wave 3. I don't know what wave 4 is going to do or wave 5 is going to do. Wave 4 can be deep, and then wave 5 can be extended. Wave 4 can be regular. Just retesting the top of this, what you're basically going to be making a cup and handle. If wave 3 plays out like that, you're essentially going to be making a cup and handle with that neckline, and so wave 4 would likely come here before going for wave 5. But this looks good. Nothing, I mean, it's in impulse, so it's easier to read. It's out of, it's not like Bitcoin. It's out of, corrective price action. So you should get a big spike in volume confirming all of this once you leave this region right here. You get up here, you pop out, you should get a spike in volume. That would confirm everything. Okay, that would confirm that not only you're in wave 3, but also that you're impulsive. So yeah, it's looking good. I would say the next likely target is 38, thereabouts, before any type of retracement. But again, if we're in a bull market, really in a bull market, you don't want to touch it unless you don't have to. Even if it goes here and then comes back down again in 3 waves like this, I still wouldn't touch it. I mean, to each his own. You can trade in and out, but it should go much, 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 much higher if the DXY is doing what we think it will do and Bitcoin does what we think it will do. All of these altcoins should go so much higher. Milad says, I'm doing well, still sleeping. Very good. I've bought at 13 euro. It went to 17 euro and then down again to 10.5 and now 14 euro. Yeah, that's fine. You basically bought the bottom. Milad, you don't want to really consider these little small, being down a little bit, being up a little bit. That's nothing. Like, when you're buying the bottom of a market, the macro bottom, like, the way you make big money is just buy and you don't even look at it, or you can look at it, but you don't worry, you don't touch it. You don't touch it until it does what you think it's meant to do, which is multiply many times. Okay. So Milad says, I believe in the project, but it's going slow up. Yeah, everything's going slow, bro. I mean, it's just nerve-wracking. It's doing better than much other altcoins for sure. And he says, but when it's extreme low from 17 to 14, inshallah, I believe in the project. Yeah, I believe in it too. I think, when you're investing in any project, if the fundamentals are okay, you'll be fine. So, I think you'll be okay, Milan. You just have to wait a little bit. And it's hard to say how long you have to wait, but I think looking at the DXY, right, as we've been looking, Bitcoin and the entire cryptocurrency market is going to go very soon. I mean, it's been very difficult having to wait for this, right? We've been waiting for what it seems like forever for this move to happen. But it will happen, and when it does happen, it's going to not just surprise a lot of people, but even the people who think it's going to go up, like myself and other people who are bullish, who see this pattern as clearly a consolidation reversal with strong support to the downside, it's going to shock us how much it's going to go up and how fast, right? Because what's happening during this period of consolidation is people are buying. They're buying and buying and buying and buying and buying, right? We just had a news story today. You can see here in the news once again. You can see here so many bullish stories. And I don't trade bullish stories, so right, I don't care so much. But this is really happening. Where is it? There's somebody who bought $6,000, 6,000 Bitcoin rather, and moved them off exchange. And we all know when you move stuff off exchange, that's very bullish sign. That means a whale is putting it in cold storage. Okay, I don't know where the story is, but somebody just moved off of Binance 6,000 Bitcoin, which is not that much. Again, that's not gonna do shit. Even if they buy 6,000 Bitcoin, I think it was like $120 million. We're talking about a $400 billion market cap, right? 120 million is nothing. That's not going to move the price. As much as we think it's a lot, it's not, right? So anyway, people are buying, and institutions are buying. Everybody's buying, but that's not what's necessarily going to move it. Yes, in the aggregate, it does. Okay, in the aggregate, a bunch of people buying, a lot of buy pressure will move the price, but it's not just like one whale in one moment. But these moments of consolidation really create explosive moves to the upside. You don't get an explosive move and like rallies that last for days on end without stopping, and the price is just going up double digit. You don't get all that stuff without all of this consolidation right here. Without all of this consolidation that we've been going through since late June, right? For almost 100 days. You don't get those big moves. And when we get those big moves, like I said, it's going to shock people. It might be that the first target is 47K. It might be that those candles are that big, right? Where people were thinking, oh, we can't even break 20K. There's a lot of resistance at 25K, all that stuff. Like, we might skip all of that stuff and go straight like this here. Let's see. Sorry, I'm trying to fix the chart. Let's do away with the volume. We don't need that. Like, I would not be surprised, given all of what's happened thus far. It's actually going the weekly time frame. That if we didn't just do this, up, consolidate, right? Like literally just up in 1 week, hit these very important resistances, because this is again a new bull trend. Like this flat correction, this ABC flat correction finished. You consolidated. Your next major resistance, like major resistance, you could say it's here, but to be honest, it's here. So, like, who's to say that doesn't happen with a weekly candle? Who's to say that doesn't happen? And if you look at our larger term prospect, or our larger term target of 1.7 million, which is still on the table, okay, for Q1, around Q1 of 2023, who's to say that that doesn't happen like that, right? And your first target doesn't come out to be maybe 40K, okay, 40K or 60K even. You consolidate, and then you go like this, right? Because you're putting in 5 waves, right? You have to put in 5 waves to get to 1.7 million. Wouldn't that make sense that your first wave go like this, and your second wave go like this, right? And if you think about it, so my date is February 19th. So let's just say late February. Right now, it's September. So September, October, November, December, January, February. That's 5 months. 6 months. Let's say 6 months. So maybe 1 month here, 1 month here, 1 month here, 1 month here, 1 month here. Right? It's like 30 days, 30 days, 30 days, 30 days, 30 days, something like, I don't know. I have no clue. But I wouldn't be surprised with all this consolidation, all this slow price action, that the moves are bigger than people even think possible. Yeah? Yeah. Would not be surprised. Not one bit. Because it's almost unbelievable how much consolidation is happening in the market. And that's a good thing for whatever direction you're going to go. If it's a lot of consolidation and the next big move is up, then that's going to be a big freaking move up. If it's a lot of consolidation, next big move is down, it's going to be a huge move down. All right? It's pretty much it for me, unless there's anything else you guys want to look at. Milad says, 2017 was great, almost no dips, big moves. We will move fast, just like 2021. June, we went from 28 to 69. I think so. I really think so. I think it's gonna be crazy. It's just, when does it start? I think it's gonna be soon. But it's tough to be patient. That's what's one of the hardest things, not just in the markets, but in life, to be patient and to still pay attention, be in all your positions, and once it happens, be ready to take profit. But guys, appreciate it. Have a great rest of your, what day is it today? Monday. Happy Labor Day to my American people. Happy Monday to my non-Americans. Hope you all are doing well, and we'll talk tomorrow. All right, take care.